Hey guys, Max here, and this is your daily market update for the 10th of December yesterday. Today we're going to look over the markets itself, inflation of course, before we touch on Omicron, a little news from China and Evergrande, and then a little bit of news regarding hedge funds and short selling. I hope you enjoy. So obviously the huge news is that inflation came in super high and there's really no surprise there. The consensus estimates were about 0.7% month-over-month inflation and 6.8% year-over-year inflation, which were very high estimates, don't forget. The reality was 0.8% month-over-month, but still 6.8% year-over-year, so higher than already high estimates and not at all good news. 0.8% annualized inflation is 10% over a year. That should be really scary, but markets and the government are basically delusional and they are just ignoring this new rate and claiming that it's actually good news because it hit consensus, or nearly hit consensus, despite the fact this is the highest yearly rate of inflation since 1982, almost 40 years ago. Of course, the increases were all across the board as well. There wasn't one area that caused this spike, so there really isn't an easy get out for the Fed or the government here. Gasoline was up, food was up, shelter was up, vehicles were up. Everything was up over the month, basically. The consensus for inflation now and in the future is that it will continue to spike a little bit and it will touch about 7% a year, but the consensus has been short almost every single month over the last year, and so it's probably going to continue to miss the reality in the future. It's also worth noting that the CPI is just one way of measuring inflation, and it's used specifically by governments because it shows lower inflation than the reality. None of this inflation includes the crazy asset price inflation we've seen over the last year, with housing prices soaring in value as well, which do have real impacts on people's finances. Of course, inflation is high pretty much all over the world, but the US is further along in its cycle and it tends to see high inflation 2 or 3 months ahead of other countries like the UK, Europe or Japan. Now, Biden actually came out for once and made a statement, and he claimed that inflation has now peaked, that it's going to rapidly decline, and I obviously sincerely doubt that. He also at the same time said he's not in the business of making predictions on inflation after he'd just made a prediction on inflation, so whatever the hell that means. But he also said that employment and growth is racing ahead, which again is not 100% true. Employment growth or jobs growth missed expectations by 60% this month, and real growth is only really high due to lockdown rebound, and it's expected to slump in the second half of 2022. Biden also went on to claim that inflation is due purely to supply-side shocks, which we all know is not true. Part of it is, but not all of it. He didn't accept any blame for his loose spending or the poor monetary policy of the United States over the last year. So to me, it seems like he's just trying to push the blame away from himself, but maybe he's trying to push the Feds and Jerome Powell to be more dovish in the future. Maybe he wants to keep rates low and keep tapering going and continue to inflate asset prices because it makes some people very wealthy and those people like that a lot, despite the fact it is severely hurting the average person in America. No concrete news there, but that's just what I suspect might be going on with Biden making this statement. Now, of course, Republicans jumped on this news of high inflation beating consensus again. Don't let people tell you that this hit consensus because it didn't. It was higher, just not by much. And the Republicans are trying to use this news to scrap the infrastructure bill, which surprises no one. Of course, they've wanted this bill dead for months anyway, and yes, this is just political grandstanding, but that doesn't mean that they're incorrect. This infrastructure bill will make inflation worse. They are right about that. In my mind, and I'm sorry if I offend some people, but the Democrats are being grossly irresponsible regarding inflation, and I say that as a Brit who really has no allegiance to any side of US politics at all. Just from my point of view, looking in on the country, I see a grossly irresponsible government. Now, the markets once again proved that they are inefficient as stocks boomed on this bad inflation news. The S&P 500 was up 1%, the Nasdaq was up 1.1%, Treasury yields fell slightly, gold jumped a little bit, and the dollar dipped. Now, inflation data was bad. It was bad news, no doubt. So why did the markets go up? Well, because forecasts expected 6.8 inflation, but investors expected higher. The markets claimed that they priced in 7.5% inflation, and that because it's only 6.8, that's good news, so stocks should boom as a result. The reality is that markets are no longer efficient because there's too much liquidity in the markets. When investors saw that inflation was only a touch above consensus, they thought that was better than they expected, so they bought stocks. Investors think that because inflation was near the consensus, again, Consensus is just what banks and institutions predict. It isn't what we should have or anything like that, but they think that it's somehow good news, so the Fed won't have to accelerate taper or interest rate hikes. Gold jumped as some people are not deluded and saw that the highest inflation in 40 years is not good news, and the dollar dipped because international markets and foreign exchange are a little bit less irrational than purely US markets, and they can see when inflation is bad. To be perfectly honest though, we just need to wait and see what the Fed does again. If they accelerate tapering and interest rate rises, then all of these gains will be erased. I hope you guys understand that, because that's the simple truth. Biden wants the Fed and us to think that inflation is fine, and so that the Fed doesn't have to accelerate, but I'm not 100% sure if Jay Powell is going to go in that direction. The way he's been speaking recently really does make me think that he's realized how wrong he was in the past and that he needs to change his ways, or the markets will just collapse. Sadly, the boom in stocks mean that the market is pricing in this good news in the future, but this is a very risky bet and it's a very hard thing to predict what the Fed will do. So volatility is likely going to remain high. Now, other markets around the world remained pretty constant with slight upticks as there were no real developments for them. Foreign currencies tended to do a little bit well as they rose against the dollar on its poor inflation report, but that is after weeks of poor performance, so it really isn't that indicative or anything. Oil again ticked up to about $72 a barrel, as well as demand is not actually dropping as lots of people had claimed it would on Omicron or on EVs. Cathie Wood might just be on suicide watch, sadly enough. Now, there is a little bit of Omicron news, but again, it's still just early data, nothing 100% for sure, and the markets have pretty much shrugged it off. Now, the first thing is that the Omicron variant is apparently spreading very quickly in the UK, maybe 3 or 4 times quicker than other variants. Now, again, that is a big maybe here. The UK does a lot of gene sequencing, which means as a whole, the country knows more about what variants are where and how quickly they're spreading than other countries do, as does Denmark and South Africa, 2 other places where there have been Omicron spikes, which makes perfect sense. The truth is that in all other countries around the world, they probably just aren't aware of how much Omicron is present because they aren't sequencing enough of their positive tests. There is some good news from the UK regarding Omicron though, as well, as a study showed that booster shots provide 70 to 75% protection against Omicron, so vaccines will probably work at least to some extent, hopefully just stop people from going into hospital and dying as much. Then we got news that the US Department of Justice is probing hedge funds' short selling practices, which is brilliant news if you hold AMC or GameStop, or if you're a Wall Street Bets fan in general. Now, the idea here is that some firms build reports of shady doings by companies, and then they take out big short positions and then publish their reports. The stock price of these companies tanks, the firm makes an awful lot of money, and everyone's happy except for the company that got targeted. Now, basically, the Department of Justice is investigating the connection between researchers and funds and wondering whether or not it should be legitimate. The good news is that this could stop legitimate businesses being untacked fairly by overwhelming amounts of short sellers, and it could help companies like GameStop or AMC. But there is bad news to this as well, and it isn't black and white. Short selling isn't black and white either, I'm afraid. Take a look at Nikola and Lordstown. They were both real frauds in the EV industry over the last couple years that were exposed by these sorts of research and short selling firms, and they provided valuable market discovery in those cases and exposed real fraud. To be perfectly honest though, it's unlikely that anything concrete will come out of this, sadly. Don't expect any radical change here, and if that change does come, it's going to take years to actually materialize. Maybe, if we're lucky, naked shorts might get shut down, but shorting and research as a whole is likely here to stay, so don't expect much else. Now, in China, of course, I put out a couple videos touching on Evergrande yesterday, so you can check them out if you want more details, but Evergrande is still a huge mess. But what we're going to talk about today is the fact that the CCP cares more about hiding the mess than fixing it, as is of no surprise to anyone who's ever read anything about an authoritarian dictatorship. Basically, loads of Chinese authorities have been coordinating and sending out statements trying to control the narrative. Evergrande still isn't saying a word, but the CCP are, the insurance regulators are, the People's Bank of China, China's premier, and Beijing itself are all coming out with coordinated statements basically saying the same stuff, trying to control the narrative. They're saying that Evergrande will not be bailed out, that they will not reward bad business practices and irresponsible debt, and that there will be absolutely no contagion as all the fallout from Evergrande is ring-fenced. To be perfectly honest here, I think far too many people are giving the CCP too much credit here. The The CCP is entirely complicit in the debt growth model that caused this crisis, and now that it's turned bad, they're pretending to be opposed to it when they were the ones who helped create it. They are also going to prevent Evergrande from actually falling. They will likely take control over parts or even the entirety of the company and make sure it can continue to run. The only difference between the CCP and the West here is the executives who ran these companies, who just 1 year ago had full support from the CCP. They were high-ranking party officials, they had all the privileges that came with it, and they were best friends with Xi himself. Well, they will receive all the blame. All of their assets will be taken from them and they will be executed behind closed doors. Don't fall into the trap of seeing that they say Evergrande must be allowed to fail and think that this is good policy. The CCP is the reason Evergrande was allowed to get to this position in the first place. They should not be praised for now talking the talk after they failed to walk the walk. Finally then, as we are getting closer to 2022, more predictions for the year are coming out, and Nomura, a big reputable financial services company, said that they think the real risk for the economy in 2022 is stagnation but no inflation. Now what they're predicting is very possible, to be honest, and what they're basically saying is that they see very poor economic growth, poor profits for companies, higher savings from consumers, and tougher job markets. And this would all damage demand and cause inflation to fall, so not stagflation, just a tough economic outset on its own. They're also predicting tough US growth in the second half of 2022, no rate hikes in Europe in 2022 at all as inflation will fall, and continued declines to growth in China. Now that final prediction there is blindingly obvious. China's going to have a bad year, of course they are. Now the rest of it is all very plausible but not certain at all. The real question that makes it uncertain is if supply side shortages are going to slow down and if they're going to stop. But at the moment, it doesn't look like they are slowing down, they are maintaining, and if they continue, these predictions will probably be wrong. If the supply side shocks, things like chip shortages and shipping shortages fix themselves, then Nomura could be right here, but I'm leaning towards them being wrong. I think inflation is going to remain high though, so stagflation is much more of a possibility and a threat than stagnation on its own. I actually put out a video a couple weeks ago about stagflation, explaining what it is and why it's a threat to the economy today. So if you want to check that out, there'll be a link down below in the description. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There is also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.